See, you said the team.
I can't hear a thing.
Here now.
Oh, I can hear it.
Shaky, glad to be back after this
Oh,
quarantine.
we are back. I'm pumped. This is the first time in my office in a few days. Feels good to be back, you know?
I see you dressed for the occasion. You
Just to the occasion, I got my new TE wear. Bennett, how you feel about the tie-dye? You like the tie-dye?
Oh my God, you could not pay me to wear that.
Bennett, I have a question for you. A very honest, very serious fashion question. Have you ever owned a pair of spiky Balenciaga sneakers?
Oh yeah,
All right.
multiple pairs.
Okay, all right, well, okay. Okay, that's all I wanted to get across.
Tie-dye sweatshirt though.
No, too bad. They might go good with the spikes. All right, so how you doing in the quarantine over there? I got an extra like 10 pounds on myself. How about you?
Oh, I mean, I don't think I put any weight on. I'm getting bored. I really want to be snowboarding right now, but
Yeah. You didn't move to Colorado, so think about how I feel.
I just had to move that flight 3 times already.
Yeah.
I'm ready to get on that flight whenever they're
They're not ready for you.
Well, when they open it, I'll wear that sweatshirt.
Oh, you promise?
I will wear it.
Okay, locked in.
It's a deal.
All right, let's get into this.
All right. So, do we want to start with the market outlook? It's been so long.
Market out, yeah. How's this thing go again? All right, market outlook. Let's jump in. Market outlook. So we're continuing to see that bounce right now in the indices. We've done very well with it these past few days with it. And we're approaching this first resistance area, this 262-ish in SPY. But we're seeing the internals pretty strong. It's been pretty smooth sailing since we hit this bottom here. And I think we have room up to this 270 area. My only concern right now is that tomorrow's the last day of the quarter. So I'm thinking, like fund managers and everyone, they're going to have really disgusting quarterly numbers. So bidding stocks up into quarter end to try to salvage any sort of return they can would make sense to me. You know, personally, I think April is going to be a fucking disaster. I think it's just going to be a choppy mess. Like, I don't know up or down. I just think it's going to be the most volatile April we've seen in a while. But you know, we're still bouncing. We had some very constructive action today. We got to take it day by day. You know, I'm not going to make any bold calls, say bottom's in or bottom's not in. But you know, it's still been very constructive Monday as we're continuing to rise into this resistance area. But a lot of overhead resistance. You know, a lot of sellers waiting up here. I think this 270 area in the SPY is going to be very telling.
Mm-hmm. Yeah. On my end, just from like a lot of people I've been talking with, if you saw the SPY up, it's like a lot of people that wanted to get out of the market and get into cash. It was like literally March 20th, like SPY 230. They're like, if it goes below 230, I'm out. I'm never getting back in. And then a week later, you know, we're back at 260. We're up 20% off lows. And that same kind of crowd is like, I can't wait to get back in. And
right.
It seems like, the image?
Yeah, it froze.
Nah, I don't give
a fuck.
All right. So I think that, and you also mentioned this recently, where a lot of the newer traders are looking to buy, you know, third, fourth day up, and third or fourth day up in a lot of these names might be 40%, 50%,
right.
Sometimes 100% off of lows, where realistically that's just a disaster waiting to happen, where we almost have to be looking to be buying, you know, the first day up after a series of down days,
right.
Not buying up after the series of monster up days and expecting just literally near vertical run back to, you know, where we were a month ago. So like you said, definitely some very choppy times ahead. But again, we have to just be willing to buy up, not chase on the way up.
Yeah. Agree.
All right. So with that, we can jump into some of the member questions. Garrett Eddy had a question asking how to best handle gap downs since recently the 15-minute rule hasn't been working for him.
So it's tricky because a gap down isn't a gap down. I mean, a gap down isn't a gap down is a gap down. It's not like, you know, every square is going to have the same properties. Every gap down is not going to have the same properties. So, and I was talking about this, I think it was with Heaven in the last, like, shooting the shit, where it was like, I saw we were gapping down and I was fucking salivating to buy. That was only because we were gapping down like 7%, and the retracement move just makes sense there. I'm not trying to buy every single gap down based on just that methodology, there has to be a lot of context with it. So, there aren't really black and white answers in this. That's why we're kind of telling people, or I am at least, kind of stick intraday right now. If you're more of a pure swing trader, dollar cost into down moves, buying on the way up right now is much more difficult. So, what should he do about the 15-minute rule? Was that his question?
Yeah.
Hold less stock overnight because we don't know where we're going to open up tomorrow as much, I would say. Don't put yourself in harm's way. I'd say those are the two biggest things.
Yeah. And I think, and I was speaking with him probably before, so I think kind of going off what his real question was, or what he wasn't realizing was when the stock is gapping down, you're wrong. So that's the first thing, is that you're wrong. The stock's moving lower against your price. You're looking to find a way to get out and limit the bleeding as best as possible. So when you have to use the 15-minute rule and it works beneficially, that's a huge plus. But more often than not, you're probably going to be wrong in that trade. So if the trade stops you out and you look back, all those trades in the past that stopped you out the 15-minute rule, the stock more than likely probably traded lower if it stopped you out. So you were more likely happy now that you got out back then, but in the moment it's kind of annoying to get stopped out for a loss. So I think he has to just remember that, again, stocks up and down, you are wrong, and that rule is to kind of help mitigate getting out without just panicking at 9:31 off the open, blindly just selling for no reason. So hopefully, Garrett, Shake's answer and maybe mine helped a little bit. Next, we have Nicholas. He's looking at this COUP. There's 151, 155 area.
Yeah, it's tricky. It's just tricky because, the last 3 days it's come from 131. So while I think these names look good, especially these software names, and speaking of software names, we can look at the teams and TTD didn't back. But these were kind of the first names that bounced back because, they're not going to be, they're software names. So, businesses shutting down isn't going to affect them as much. So I do like these software names, and I do like this little 152-ish area, but it's, I'm not just setting a buy stop for 152. I want to see some sort of intraday flag or something intraday to entice me to buy it. It's just not like this environment. I'm not just blindly setting buy stops and sell stops. I need to see that intraday confirmation much more so.
Yeah, definitely.
That's it.
And even going off that, there was like a name I was talking about today, like for Vive, through like 150, 152, that's a it's a solid level, but I can't just blindly buy 152 versus.
Ooh, the shakedown had you buying it at 148 though.
Oh,
yeah,
see,
so.
That's another example where it's like it's hard.
But it's a tough buy because if you're giving this a low of day, this 145, which is really where you should be giving it to if you're buying this 147, you're day trading 148, whatever. You just know how far real support is because real support is down to this 133. So that you're in a lower probability environment, but then look at the action you got today. It worked out. That's just fucking day trading. It's horribly annoying because I want to tell you give this the proper support, let it play out. But in this environment, that's just not profitable. You're gonna get so chopped up and killed.
Yeah. Next, we got Anish. His question was, how should this Fed stimulus be taken once this all settles? He's asking, will this be the equivalent of steroids for the market, the stimulus?
I like to think so. It's pretty unprecedented what they did. They're pretty much giving the Fed unlimited buying power. They're saying they can buy ETFs like the SPY right now. They're even talking about eventually them buying individual stocks, which would be nuts. But it'd be crazy. It's something not to be bullish in that environment.
Yeah, I mean they did a lot of that in 2008. Taking stakes.
It still took 4 or 5 months for us to bottom.
Yeah. So I think again, this is going to be a little different than last time. One of the things when people get gravitated towards the headlines, especially when the government tries to intervene, is that who can read a 1,000-page bill in a day? You can sneak in all these little things where
Antifragile was too much for me.
Yeah, so it's people will hear it. Bill already passed, but just when these things start to happen, it's there has to be some negotiation back and forth. So when you first hear it, it's you can't really expect the market just to rage on that news because it's it has to go back and forth. They have to make some tweaks. And again, I couldn't even 1,000 pages would take an average person 2 months to read. So to expect for people to make the decision that quickly, it's very hard to do.
I gotta check that math.
Yeah. Well, I don't think I could read 1,000. Take me at least 2 months to read
That's only
1,000.
16 pages a day. It's 60 days.
Well,
But so no, but also they pretty much followed the 2008 playbook, but they didn't. So in 2008, they also banned short selling for a period of time. We haven't seen that yet, and it still took, even after they banned short selling, it took the market like 4 months to bottom still. So it's like, yes, it's really good for the market long term, but right now when we're seeing so much collateral damage, and it's just like you go outside and you talk to restaurant owners and you talk to all these people. People are hurting. The average Joe is hurting right now. You know, I hear a lot of my friends' parents even that had like desk jobs and things like that. They're losing the jobs. So we're definitely seeing a little bit economically different environment, which we haven't truly seen, in the past decade. But once we do come out of all this, I believe the recovery should be pretty sharp, and the Fed's stimulus is massive. So you got to be thinking positively, long-term market still. Who knows when this will blow over? Who knows?
yeah. Next, we got Arwen. He asked, when buying stocks for the long term, how do you how does he define his risk?
Oh, well, I mean, it's also defining your time horizon. So it's like, I'm continuing to, personally, I'm buying this Disney on dips. And I was buying this Disney up here at 130. I have a 20, 30-year outlook. My long-term account is my SEP IRA. I can't touch that thing for 25 years. So, I have, oh, damn, I'm getting old. Not that low. Oh, yeah. Whatever. So I was about to say at 130, but I'm also dollar cost averaging the down moves. I believe in the company. That this isn't an account I'm trading for alpha. I'm not trading this account for alpha. So there's no stops on these trades. This Verizon trade, Verizon goes down to $40. I'm still buying more. Just like Disney did I didn't think I was ever going to see Disney in the 80s again in my lifetime. But when it comes there, I'm buying it because I believe in the company and I have a 30-year outlook. So this type of trading very much depends on your outlook. I'm personally not trading with stops. I think I'm just trying to get as big of a position I can for the long term in these stocks by, constantly injecting more money into the account to buy more and then just buying on dips, So I think you really have to have a long-term outlook. You can't just say you have a long-term outlook. You have to really have a long-term outlook in these type of trades. Like I would never take a trade in my active trading account without a stop. And right now I wouldn't even do more than a low of Dave's stop. But this long-term account, I have a true long-term outlook on it. So, I'm not trading these with stops. Yeah. And that's why I don't gravitate towards the super, super high beta names for the most part. I am buying things like Amazon and Google, but I know my, kind of the what to expect out of these names, the dips to expect. And because they are a little bit more volatile, even Disney took a 50% haircut almost. But again, long-term outlook, need an actual long-term outlook.
Yeah, there was we hear this a lot, and it's almost like when, like at least for me, when someone says like they're like the thought is like a long term, it's like all right,
I'm holding this forever. It's like
yeah. And then as soon as it sells off, and that was leading for his question was he had tried or has been trying this, and now everything that he owns is lower, and now he's trying to find a reason or an excuse to sell it, and that's the thing when it comes to long term trading or holding, you're gonna at some point see red and a lot of red in each individual name. The average name is going to move 50. The average stock is going to move about 50% in a given year. Stock on 40 to 60, from 60 back to 30. Stocks move, so it's very easy on the way up to say, "Oh, I'm holding this thing forever."
Right.
But then when it really turns, that's when you get tested, and if you really can do it or not. And even more tested when you're down 50% or down 30, if you can add to it dollar cost average in those much harder, buys for most people. And it's definitely great if you can do it. But again, if you're just learning, it might be a little bit harder to do when it actually happens, like he's learning right now. Let's see next.
I was trying to think of the chart. There's a great Charlie Munger quote. Warren Buffett's partner. He's like, I've been in this business 50 years, and I see my account go minus 50% probably 10 times. And they're like the gods of long-term investing. That's just kind of like, because you have to roll with the punches. You can't sell out, into this down move because you have to be a long-term investor and believe the market will be higher in the next, rolling 10-year period or whatever it is. Shit, I lost you. Shit. God damn it.
And can you hear me still?
I can hear you.
Okay.
I can't see you.
That's fine. Next question, we got Darren. He's looking at this BGNE.
BGNE. Little bio?
Yeah, up through like 130.
Yeah, I mean, massive support level. I like this but buy it on the way up. You know, don't dip into it. Wait till it confirms and buy through 130, and then yeah, that's a nice tight risk setup. I like that a lot. And this is how you have to look to buy stocks in this environment. You have to look to buy the beaten up ones, or maybe not beaten up ones, but you know, look how he's buying off support. It's not, what was that name we were just talking about that's up? Like COUP is a really tough buy because it's up so much already. You know, you miss the best opportunities there. Where it's like this BGNE, if it wants to pop through that 130, you know you're getting a great price. Whereas like losing money in COUP at 153, that fucking hurts. That hurts mentally. Trust me.
Yeah. Next, we got Winley. He's asking, when it comes to day trading, he uses ZM for an example. You know, where are you looking to take profits, move your stop? You know, are you using a trailing stop? Things like that.
So what's the question? Wait, what?
Like he's asking, like when it comes to day trading, you know, where are you looking to take profit? You know, 2 to 1, 3 to 1. You know, are you using low a day? Are you trailing it on 15?
So yeah, I'm most often using low of day stop, and I'm starting to take profit now. It depends on what I think I can get out of a name. I don't want to be over greedy and miss my profit targets or profit opportunities. But what was the name today? Wasn't Tandem? Oh, DocuSign. So like normally last week I started taking profit at 2 to 1, and then I was leaving a lot of money on the table with the ZM. So I was like, you know what? Maybe I need to make the proper adjustments, and then I'll just bring up this docu, for example. Or I didn't start taking profit until I was at 3 to 1. You know, but then I'm just kicking that whole stock into strength because I don't want to give it back, and I know that I'm not. You have to know whether or not you're willing to take stock overnight, kind of going into the trade. And this docu closed well, and I held probably 20% of my position or something like that. Very low amount. But you need to go into these things about where you want to kick it. The first thing I do when I buy a stock for a day trade is I set my limit sell orders, as in where am I looking to take profit. And that's going to be based off, one, I'm looking left for resistance levels, looking left. So let's say I'm buying here. I'm looking left to see where resistance coming in. All right, there's some resistance in this area. There's some resistance here, for example. So you want to look left and you want to kick before that resistance comes in. But I'm also buying. I'm not going to buy it and, you know, be like, if it needs to get to the next resistance level, that's only 1-to-1 risk reward. I'm going to pass on that trade. I'm going to say that the entry is not good enough. So, you know, it's taking in a multitude of factors into account where it's like, am I buying this in the right spot? Are my profit targets for the day realistic? And does this make sense mathematically? Do I think I can make 3 to 1 on this day trade? You know, those are the things I'm mostly looking at.
Okay. And
trailing stops, yes. Things like intraday flags. For example, back to this docu. So I had a trailing stop. You see this little you can't see it. This little pivot intraday. I had a little trailing stop below this area for the rest of my stock because I don't care enough about these trades because they're day trades to give back profits and take losses on things that were wins because I know I need to keep a high winning percentage right now. But yes, lots of trailing stops, limit offers, trail some so that, you know, if it does want to make a crazy move, trail some on like a 15-minute chart so you'll be able to stay in it for a few days. But yeah, I think I covered it there.
Yeah. Next we got, we'll switch to some of the social media questions. This is from @thelast_McCoupin, and he's asking about BMY.
Kyle McCoppin. BMY?
Through 56.
Beastie Myers. So this is one of those examples we're talking about where it's like the best buys in this stock are far behind us. You know? This is, I think, literally what you're alluding to where it's like, this is what you said on the big picture, like fourth day up, time to buy. To me, this is not the time to buy this stock. It can break through this resistance level and go higher, but I would feel like a dummy taking a loss long in that situation, personally. You know, if you want to put that risk on, that's on you. But look where this came from. You know, it was at 45, and now it's at, you know, trying to break 56 on 1, 2, 3, 4, 5 on 1, 2, 3, 4 on 5 straight green days. So you have to be banking on a 6th straight green day of gains to make money. That's tough to me. So, you know, that's where that personal thing comes in where it's like, if you want to risk that, yeah, I see this setup, but personally I don't like that setup because of where it is, the chart location, the entry location. Too tough for me.
I agree 100%. And this is like another relative example where, you know, a lot of people like, they want to catch the low. And right now the low is March 20th or March 23rd. But on March 23rd, no one had a clue that was the low. So it's like, it looks so easy now. It's like, oh, of course I'd buy 46 versus, 45. And it's like, yeah, because now you're looking at the chart much differently than if you were looking at it when it was at 45, it looked like it was going 40. So those are those parts where new trade, you can almost get kind of like a illusion, like, oh, I'm never going to catch the next low. And it's like, well, if you thought you caught the next low, you're 6 days late, and this is when you want to, like, you're way too late. So those are some of those examples that during times like this, they're really good to refresh people. Like, you want to sell a week ago at the dead low, but you want to catch the low. Like, you can see how that's not going to really work.
Right.
And next up, we got at ManV750, and he asked us, he says, why don't you sell options?
Like selling covered calls and shit like that?
Yeah.
Personally, I mean, that because, the risk. We saw what happened last year with what was that, the TVIX or something? What blew up and fucking blew everyone's faces off? I just never want to be in a situation where something can blow up and I just lose my career. Where if you're selling these covered calls, like, so I was very controversially trying to short this Boeing into this 186, 187. I had a bunch of buddies who are like more big money dudes who were selling these 200 calls, and I see the trade, but something crazy happens, some news comes out, that thing hits 220 on some fucking crazy news or whatever. These guys are losing half their accounts. I just never want to put myself in a situation where that could be possible. Maybe I'm leaving some money on the table, maybe not, but I'm living to see tomorrow always. Always.
Yeah. And going off the question, I had a similar friend who was short in the cruise lines. The cruise line dropped like 60% from his entry, and he still lost money with the put. Jesus and it's just Christ. Like those things. But more for him, and more towards really, I think where his question was going, is for the average person or for someone who's just starting out, if you want to sell a call and you own the stock, it takes first off, you have to own, say, 100 shares to even just sell one call.
Yeah.
So if you have to own 100 shares of the stock firsthand, so for Boeing, you got to own at least $15,000 worth of the stock. Then you have to.
That's for one. And who wants to sell one?
That's just to get into the right. Just to get that income, and then you're basically telling yourself that the stock that you're long, you own, that you want to go higher, is not going to go above, again, another made-up price in your head within a certain period of time.
Right.
So again, are there guys that do it and make a bunch of money? Of course.
And these guys who do it are fucking like, they have $1 million in their account. The people we're talking to and like teaching how to trade is like, it's just so far from that level. You're not Paul Tudor Jones. Like, learn the simple shit first.
Exactly. And then the next question would be like, well, what's a limit order? And it's like, like get the gun out.
Yeah.
So next we got at PinkZX. He had 3 stocks. We've kind of covered 2 of them already, but one was ZM, Tesla, and then Boeing. Again, no opinion and no way, but I'm assuming all 3 he wants to buy. ZM, we know he's crazy late.
ZM, you're late. This Boeing, if you didn't buy at 100, you have no business buying here. And Tesla's the only one that I might be able to make a case for soon. It's not there yet. I thought this was going to sell off. Didn't sell off. We're seeing the buyers present in this area. So if it wants to flag out and make a little mini base here at 500 and then turn up, I could see that being a trade. That's the only one. And that's still like, you got to be a pretty precise and like a marksman to capture that. So I'm not a big fan of any of these ideas. I think it's just tough if you're not buying these when the good buy was. This 400-ish buy in Tesla was there. Now you want to buy it at 500 like 5 days later. It's just tough to recommend these stocks to people.
Yeah, and even like at the size chart, this is like a great example of when people have these long-term holdings. And I had a couple of clients that had bought this without me having any input in it, but they had the stock, and when it was near 900, like that crazy doji day, like, I'm up so much in the name. Like, I had guys from cost basis like 180, up almost like 500-600%. Like, I don't know what to do with it. It's like, well, like, you're up so much. Like, let's put a low day stop in, and if you get hit out, like, who cares? You made 500% in like 2 years. Like, what more do you really expect from this? And a lot of the people that did, they got pushed out the next day. They made a bunch of money. They had like 2 more days where they would have made a little bit more. And then now they would have gave back half that crazy trade. And those are some of those examples where, the guy earlier this year who bought it at 300 could have made 300%, but was too greedy, and now is back to his same price. And it's going to be a much harder trade to get back to 900 again. So these are some of these examples where you can have that long-term outlook. But if you do get these like home runs, 3, 4, 500% returns, you got to take some off the table and realize those, because stocks come up and they go down just as quick. Next question we got is from Anish_Nix. He asks, what are some of our favorite longer-term stock ideas?
All right, I can get behind this idea. All right, so I was just talking about this in the shakedown. We get another pullback. There's a few stocks I'm looking to buy. Starbucks, top of the list. Starbucks fundamentals and their growth off the charts. Everything about this company is great, and they just took almost 50% haircut because they have to shut down all the stores across the world. Yes, they're going to get hit in the short term. Huge buying opportunity for the long term. Another one I love is Google. I believe the next rally we have, and if these lows hold, I was buying into the weakness. I bought some of these at sick prices, but I took my own advice and I was like, all right, only unleash like 15% of the capital that you want to buy on these dips in case we see some like crazy depression type sell off. Again, on more of the sell off type thing. So I barely bought anything, and I got these crazy prices on these stock, and now it's like, oh, I wish I could have bought more, but I'm that classic woulda, shoulda, coulda right now. But Google is one I love. Market leader. Amazon's one I love. Shopify, their growth is absolutely insane. We use Shopify every day for our business. They're doing some really great things. And then again, I keep mentioning Disney. I think the sell-off in the short term is justified with them having to close all their stores, but I believe they'll be a market leader the next 20, 30 years. All the parks will reopen. They'll get all those superhero movies going again, and everything will be right in the world. And we'll see this thing back at 140, 150. Those are the few I'm looking at. I don't want to buy super speculative names, super high betas. I want to buy the big companies at great prices that I believe will be great companies for the next 10, 20, 30 years. Amazon, Google, Starbucks, Disney, Shopify. Those are my go-tos right now.
Yeah. The four I have on my list are Apple, Amazon, Baba, and Berkshire.
Yeah,
about
exactly.
Amazon.
Oh, Baba's on there too.
Yeah.
Apple
Baba
just didn't come down enough for me, but
yeah, same thing. Like I have Apple too, and my main thing was like it's not a good deal yet.
Right,
but,
right.
The two you didn't talk about was Baba and Berkshire. Baba, everyone's buying off Amazon. Basically, 9 out of 10 things you're buying from Amazon is coming from Alibaba. So most people don't really understand Baba's story yet, and really all the stuff they do kind of behind the scenes, and they, everyone can't wait for these masks, and they're buying from Amazon, but the masks are coming from Alibaba. Right. So I don't think most people really understand Baba's story, and I think just technically, like the chart through 200 still looks amazing. And then for Berkshire, again, you're talking about the guy who's been through more depressions and crazy markets than anyone who's actively trading.
Oh man, he's gonna come out of this with some sick deals. Yeah. You're gonna hear like, oh look, Warren Buffett owns fucking 3/4 of JetBlue. Where'd that come from? Yeah.
So if I had to put my money on anyone, it's like he's probably going to do better than this than anyone else in the street.
True.
So
I didn't even think of that. That's all right. They're on my list too.
So it's like just trying to, again, but we can't just blindly buy these names. We got to find pockets where it makes sense to nibble in.
Right.
But those are the main four that I'm definitely looking at.
Big theme there. Big, all huge companies, all really successful, great companies we use on a daily basis that we're trying to get at bargain prices that we believe will be leaders in the next 10 years. It's very simple.
Yeah, very, very simple. Next question we got is from Kirsten _. He said, "What are some good strategies to use as a swing trader right now?"
You got to buy into ugliness. That's it. It's tough. It's right now we're coming off of like 5 days up. 1, 2, 3, 4, 5 up days. I mean, last Friday wasn't an up day, but we were still green intraday. It's tough to buy strength. So the guys who did well, shouts out to like Higgins, Tom, all these guys. They were buying these things when it was the toughest buy, and they killed the move. What was it? This Disney. I got some from like 85 here, but it was like it's long term. I didn't get enough where it's like I'm looking to sell it yet. But these guys were making like huge, like 30%, 40%. This Boeing people were buying this 100 area, selling it 150, 160, 170, 180. Shouts out to those guys. The reason they did so well is because they bought ugly and they sold when it began to look good. And that's, I keep telling people, you have to stay flexible. You have to, and that's really what I mean is you got to buy your favorite things when they're a bit uglier and sell into when it looks starting to look good. And that's what's tough because now things are looking good, but the guys who are making money are taking profit right now.
Yeah. The only thing I really have to add is again, a lot of these charts, even like for Boeing, has been so stretched that each candle like looks the same
Looks
as
so small, but it's like
but percentage-wise, they're these massive moves. So,
Right.
you know, 5-6 months ago, we were risking 1% to make 5. Now, realistically, you're probably risking at least 10% if you're holding his name overnight.
Oh yeah.
So it's like if you're going to risk at least 10%, you got to be looking like they were doing, like, Higgins, those guys making 50, 60, 7% in Boeing. Those are great trades, but that's how much you had to really make. You couldn't risk 10% and sell it day one for 2 or 3% gain. It's just, you're better off just doing nothing. So it's just, if you had to risk 10%, you got to really just size down so you can really, you can't buy the same amount of stock, risk 1% as you would buying a stock that was 10%. So you have to just kind of size down, and when you're wrong, get up quick. Even like the UTX, me and like Drew Bronner were buying it, and it bounced again from 90 to 110 in 2 days, and it came right back to 94. And it's like, you got to get out because this thing's going to blow right down through 94, and it drops another $30. So those are some of those lessons where it's, as soon as it gets back to your price, you're better off just moving on than trying to be the hero or thinking it's going to hold and immediately rip back up another 10, 20%.
Yeah.
All right. Next up, Brandy Cohn. What's the best way to analyze your trades to find out where you went wrong?
So I mean, this is what I do is I just print out the charts and the literal candles, and I look at them as I feel like the thing about trading is that at the end of the day, you can always see what you should have done. There's always the market's always right, the price action is always right. So you can look back, print out the things, and say, if I knew what should I have done, where should I have bought, where should I have stopped, where should I have kicked, and just kind of go over. I look at it as like going over film, like going over tape. If you're into sports, just kind of looking at your action, and literally mark on a chart, like you can see on this chart where it's like, this is a pretty good trade. I don't have much to say about this, but it's like I bought through the high, I kicked into the strength or whatever. And you want to look at the literal points on a chart where you bought and sold, and then what you could have done better and just improve upon it. Where it's like, a great example was ZM, where I did really well with the ZM trading, but I was taking profit too quickly, and then that led me, I was taking profit off at 2 to 1, like pretty consistently, and this name ended up going $60 more. But so the adjustment I tried to make was like, all right, when I'm right, maybe I can squeeze out a little bit more profit in these names. Maybe I should hold on a little bit tighter for the intraday action and try to get the 3 to 1 kicks off or 4 to 1 kicks or whatever it may be. So and it's all going to be personal. It's all going to be very dependent on how you trade and what your personality is like and things of that nature. But it's just going over your trades. That's it. Mapping them out.
Yeah, I think if Brandon, if easy site. StockTrader.com. It's free. It's an easy stock journal. You can enter in your your ticker, your price, your quantity of shares, where you sold, if you paid a commission or not, and from there you can, and as you continue to use that site and put in all your trades, you can actually run simulations and it'll show you, okay, your best winner has been a 5% gain, your worst loser has been a 10% loss. So you can pick out from just the stats of how you're doing, and then like Shake said, print the chart out, do your journal, and it's always much clearer before you get into a trade and after are probably the two clearest times you'll think. And then when you're in it, everything you thought about kind of goes out the window. So when you can journal after the fact, definitely will help show you where your mistakes were. And then it comes down to you if you can actually realize where you made your mistakes and actually change them versus just repeating the same one over and over again.
Yeah, I don't really talk about it a lot, but I spend a bulk of my free time when I'm working on my trading just journaling and going over my trades. I think that's the most important part to becoming a better trader, seeing where you went wrong and just seeing the consistent mistakes you make, because that's the only way to really correct them. It's simple.
Yeah. All very simple stuff. I think with that, we can jump into good trade, bad trade.
All right. What the fuck I had a lot going on last week, so it's tough to kind of explain these. The best trades I had were intraday trades last week. We're buying this Google off support, things like that. We crushed this Microsoft. We crushed this Microsoft this day on the way up, and I think this day, or maybe it was, I don't know, one of the days. But today, Microsoft led the market. This has nothing to do with good trade, bad trade, but Microsoft led the market. The mistake I made personally today was I recognized that Microsoft price action today. This started going way before the market showed strength, and then eventually the market started to rise with this Microsoft. Microsoft is 8 or 9% of the S&P at this point, or all these names combined: Microsoft, Apple, Google, Amazon. They're like 30% of the market, right now. So it's kind of a weird time in that regard. But when you see these names going, you got to kind of take into effect that it's probably time to buy because they're going to lead us higher. So, but all I've been doing, my good trades have been coming off, buying off support, waiting for the market to pick direction. What was the trade today? DocU. I did well with this DocU today. I just bought through the highs here. I took a loss trying to short this Broadcom AVGO. Here's the trade setup. It was kind of a retest to this area. Resistance, support turns resistance on this way. We saw the hammer that I put in Friday. So if this market wanted to puke again, I got short below this low, and it just didn't work out. That's a fine trade for me. It did work out in this Boeing last week. I was like the enemy of the state here because people were long. But, this stock was up 85% in 4 days, and then it came out that the company didn't want government stimulus. It's a fucking short. Sorry, everyone. It's fucking short. But and then I got paid a little bit Friday. I kind of just made my money back on this one. Didn't do anything good, but it's been the intraday trade. It's just been all intraday trades, waiting for a market to pick a direction, buying off support, and then sometimes shorting off resistance. I know we don't do it as much, but I'm kind of getting more accustomed to it as we see more and more volatility. I just don't want to be trapped to only be able to buy when I have to do. I'm doing things every day in this market. But it's a bunch of mishmash. My executions are way up, I'd say. What about you, Ben? What do you got?
So again, it seems like this whole chart talk's been relating back to like long-term holds. So I have like one relative example was this PG that I've been in for more than a year. I bought this up through 100 with a lot of the guys. I think I'm probably was the only one still in it. So again, we bought up through 100 back last March, rode this all the way up. Had a couple of spots we added into and sold into some of the pops. But at the highest point, I was up like 28% in it. And this was a time where, PG 125, guys wanted to start getting into it. And for me, being in it so long, I just saw that uptrend start turn to a little bit of consolidation. So I was trying to keep some of the guys away from it because I didn't see it having this robust breakout, but I was still holding, being in for much lower cost basis. And you can see these crazy whips this name's had. And again, I had a break-even sell stop, got me out 99.99, and it's back up 115. So, it pushed me off break-even, and now it's up 15% higher. That's just part of trading. Even when you talk about long-term, if this could have gone to 70 or to 80, whatever it could have gone to, I don't want to sit through any of that. So those are one of those examples where I sat in this name for a year, was profitable for the entire year up until I was up 20%, and then it came back to my price and then lower. So these are some of those examples when people talk about they want to have a long-term position. You still have to know when you have to sell for a profit or get out. And those are those things that it does take some time. Like this took a year to sit through when you're a new trader holding stock for a year is like 10 years because it's just so much trading happens in that time span.
Right, and we come and sit and stare at the chart every single day, at every tick.
Yeah, and that's like for something like this, I bought it that one time. I maybe moved the stop like 5 times. After it really took out that 104, I moved it to there. Me and Nick Neff were in this for the longest time. We moved it to 108, moved it to 112. We kept trailing very wide and on the weekly, and it kept us in for the better part of the year. And then when it came back, it did get me out. That just is what it is. So that was the main one. I haven't really been doing too much other than just dollar cost averaging all the sectors and some of the major names that I've been liking, like UTX and American Express, but nothing too quick from a swing trading standpoint. But it's much lower for me.
All right.
So with that, I think we could jump into top ideas for the week.
Yeah, I'll start. So we're seeing a lot of the similar patterns out here because of the SPY's last 3 days. Kind of a nice consolidation, holding support. So a tricky area. Kind of going into this resistance. There are a few names that are looking really good. Apple is just consolidating on its 200-day simple moving average, 2 inside days, very, very tight. Risk reward looks like it's on your side if we want to bounce from here. Another one's very similar chart. Again, Adobe, same thing, consolidating on the 200-day moving average, looking like it's kind of wedging a little bit right here. So if we can break this to the upside, looks like it's got higher in it. Again, if this Google wants to bounce off this massive support, where it looks like it's trying to create that bottom, it looks pretty good. And then I really like to the short side, I really like this TXN short. where it's just, it can't really bounce with the market as much. And it's kind of, to me, this is a bear flag right here. If it can't hold this bounce, if we don't see a huge bounce out of it tomorrow with a market rise, I think that'll be a very big tell on it. But again, this is very similar to the Apple chart, where it's just they're all consolidating because of the last 4 days of the market has kind of chopped around in this area, albeit a wide area. But again, most of these charts are looking the same. So it's everything is going to be market direction dependent. If we continue to rise, all those long setups are probably going to work out. If we have a failed up move into resistance and reverse, they're probably all going to fail. So a lot, very market dependent type thing.
Yeah. I think the main one on my radar is this YUMC. Chinese name, still bull flag and hasn't really gotten too beat up. Still respected that, that earnings gap up that 38 area. So this is one that's kind of on the radar for me, at least, through 44, through 46, through 48. Like those are the spots I'd look to be buying on the way up. Versus, for now, like you really got to give it verse 38. Anything else is going to randomly kind of push you out. It's surprising to me that this name has held up so well, given all that's been going on, especially where a lot of this has started. It's surprising to me that it hasn't really gotten really smoked. We've seen other recent IPOs, LK, cut in half. A lot of the other, even like Yeti, a lot of those names getting super beat up as recent IPOs, and this name just not really caring as much. Such as the one main one I'm definitely keeping a closer eye on that I'm willing to swing trade.
All right, that's fair.
I think with that we can jump into the book of the week.
All right, let's jump.
Antifragile, okay. All right.
My book?
Yeah.
Oh, I thought you had the same one. I was like,
No. I read like 30 pages of it and I put it down.
This book, right?
Yeah.
Antifragile. Oh my God. I read this. This is my book of the week, Antifragile. This is the smartest and most difficult to read book I've ever read in my life. It took me so long to read it, but it's just so relevant right now. Nassim Taleb, one of the great thinkers of our time. He's part philosopher, part statistician. He notably got super rich from some black. He loves black swan events. I think it was either the '87 crash or maybe the tech bubble. I forget. But he got super rich from that, and he's just been writing books, and he just kind of does his own thing. This book is about things that gain from disorder, Antifragile, and the most relevant way to put it. I mean, this book goes into so many different trains of thought. But the way you could look at it is, you're pretty trained in life to go to college, get that college debt, but get a good job and pay it off. And that's the proper course of doing things. When really, we look at, what's happening now with the coronavirus, that's the most fragile way of doing things. You get fired and you're fucked. You have no options. Whereas, you take an entrepreneurial route or something like learning how to trade and you become your own boss and, you have a lot more opportunity in the world during these times and things like that. It's much more of a robust environment. Whereas if you're just working a desk job and, they're not paying you anymore, what are you good for? So I think this is a great read. You definitely want to block out a lot of time because it's way smarter than us dummies. But Antifragile, great one, classic. What do you got for me?
Yeah, that's one of the few books where I've read the first 30 pages and I put it down. I'm like, I don't want to go near it.
It's
like it's
my God.
It's a dense read. It's a hard one.
Yeah, it's dense for sure.
I'll definitely have to get back to that one. The one I read was Tulipomania. Basically, if you flipped our stock market upside down, that's the first bubble. This is going back to the 1600s. They had one of the first options contracts or future contracts on tulips back then. And this is one of the most referred to bubbles, ever before even all the other ones.
But I have a great point after this about Tulipomania because I finished that other book. But go on.
Yeah. So during the peak of this, a couple of the things the reasons why it got so exacerbated back then, where it was going on, you didn't really have accessible drinking water, so everyone only drank beer, 24/7. You woke up in the morning, you drank beer. So everyone
I didn't know that.
Pretty much was, and if you were poor, you drank beer. If you were rich, you drank wine. And beer came in two different strengths. It was either the weak quantity or the real beer. So pretty much everyone always had somewhat of a buzz on. So that's one of the reasons. Two, these were traded like options, where you and I were buying the stock. We're putting a larger chunk of money into the name, and we had to put the money there. The average person, they can't buy 1,000 shares of Boeing, but they
Right.
can buy an option of it. So for Tulipomania, you were able to buy these like contracts on these tulips and speculate on where they're going to be in the next year. So it was very easy for the poor person to get in on this. And then lastly, they traded in bars. There was no exchange. There was no bucket shops. There was no financial tulip broker. It was just person-to-person trading in these bars at night. So it would be, think of when we all meet up at a bar and everyone's
That'd be sick, yo.
everyone is that much more enthusiastic about
Oh,
whatever.
that would be fire.
So those are like the three reasons why they just added
That's funny.
food to this flyer. And it was like past a buck. You know, I bought this patch of tulips for $50 and I sold it to you for 55. You sold it to the next guy for 60, and it kept going on and on and on and on and on. And then and this bubble ended in one day, where there's all these stories where like this.
Oh, really? That it all crashed in one day?
And like it was pretty much over in one day.
I didn't know that. That's
so cool. It keeps crescendoing up until it gets to its peak, like Bitcoin at 19,000, when everyone wants to be in on it. But again, everyone's cost base is continuously rising because they're buying these contracts and then trying to sell it for like marginal gains to the next person. So once it gets to the peak and everyone wants to sell at 19,000 and no one bids, buy it, no one wants to sell it at 18 because then they're going to finally realize their loss. Not only that, it's they're borrowing money and it's leveraged. Yeah, they're buying these so it was like overnight the bids just dropped and the whole pretty much tulip market was over in a day or two. But it didn't have any ripple effects on the economy because it was a very small pool of people that were speculating on tulips. It was just the Robinhood guys. It was like that whole crew got wiped out, but everyone else, it didn't really affect them. So it didn't affect their economy at all. It was just even for the people that had tulips, like the tulip farmers, it didn't matter to them either because they still had the tulips. It's just they weren't really worth. It was like they dropped 90% of value, but a year prior, that's what they were selling for anyways. So it's almost like the market now. The market was up 30% and then it dropped. Everyone's freaking out it's down 30%, but really the first 10 and 15% of it was giving back profits. So it was kind of like that rationale where, your dollar a year ago is still a dollar today, but you just kind of gave away paper profits. So that was like the peak of it. It was very interesting. Again, this is not as hard to read as Antifragile because it's kind of written like Old English. But again, it's definitely a pretty fun read.
So I think there's really funny parallels between Tulipomania and what we're currently going through, because what people don't realize, and you mentioned it briefly, with Tulipomania, the reason that things got so overdone is that the stock market or the options market was just so newly created within like 1 or 2 years of that. So there was just such mass hysteria around it. And what I think is so funny is that, so we're dealing with the coronavirus, and obviously it's very serious, and there's going to be the horrible stories and all that. I'm not trying to, undermine that at all, but this is the first time we've had a virus where social media is so present. So we're getting every picture of every Italian hospital, of everything like this. Even so, when we had the SARS thing, SARS was what, 2011, where it was like there wasn't Instagram was maybe just starting. Twitter was like you had to be on Twitter to have it. But now, where social media is like my mother is on social media more than I am. Like everyone, like it used to be like only young people were on it, but now everyone's on it. So now the mass hysteria and everything, all the information flows so much more quickly. So that fear spreads so much more quickly because the social media is so new. I think that's very similar to Tulipomania. The first time they had the opportunity to trade a market, they bid this momentum trade up for days and days and days until it absolutely crashed, because that was the first time humans were dealing with that type of thing. So I was thinking about that the other day when I was reading about Tulipomania myself, where it's like, I wonder if we didn't have any social media, or if social media was as big during SARS or H1N1, if we would have seen this kind of reaction where it's like, you can't turn the TV on if they're not talking about coronavirus. It's weird type thing. Yeah. So it's funny because I think social media really perpetuates these things, and that's not to say the virus isn't serious and we're not seeing these things. I think there's going to be some serious collateral damage when this is all said and done with the economy, because just shutting down all these small businesses. But I just think there's a lot to be said about the entrance of social media and then how quickly fear gets spread now.
Yeah, there's another book I finished this one, and I'm on One Up on Wall Street, which is a book from like the 90s, like classic
Yeah, who wrote that?
Let me pull it up real quick. It's like literally.
Yeah.
1 second. Peter Lynch. He runs the Magellan Fund of Fidelity.
Yeah, that old thing.
So one of the things he talks about is he talks briefly about these black swans. So now right now everyone's preparing, buying 10,000 rolls of toilet paper, buying all these masks. They're preparing for this happening again next year or whatever. And he talks about all these like major events that happen. The next time it's always something different, So it's like
no one could have seen coming.
Yeah, no one saw this one coming. No one saw the last thing coming. No one saw
Right.
Christ. No one ever saw any of this stuff coming. And then you overly prepare for it next time, but then next time
doesn't come for 20 years.
It's a different fire. Yeah, it's something completely that we also are not going to see.
And the blowback from this is going to be so funny. And when it's finally over and done with, there's going to be like a new virus. People like, I think this is a very paradigm shifting thing where this is like the thing of our generation where it's like, our parents had like the Vietnam War and that's what they were scarred from. Ours is going to be from the coronavirus. And like, we're going to see all this blowback. People are going to be buying, the hurricane insurance right after Sandy hit type things,
Health insurance.
No. The hurricane. Yeah. Oh, yeah.
Healthcare providers. All right. I think that wraps it up for
book
of the week.
All right. Till next time, folks.
See you next week.